Joining us now for more is David George, senior research analyst at Baird. He upgraded the stock to outperform last week, saying the selling was overdone. So, David, I'm curious what you think now, the fact that we have a little pop in shares because perhaps the worst is behind us?
We'll see. Morgan, good afternoon. As you know, I think we're on the show Friday, but Zions reported what we think, and the numbers are obviously coming out, but it looks very good. They beat on revenue, as you mentioned a moment ago. Despite all of the panic that we saw in your network and others on Friday, where $1 billion of market cap was taken out of this company, and despite this $50 million fraud, they made over $220 million over the last 3 months. So from our perspective, the quarter looks good. So far, so good. And they beat on all relevant metrics. And the core business continues to perform well. So are happy that there was such a great panic opportunity late last week.
So in light of that, what are you going to be watching most closely on this call?
In addition to just kind of taking a look at general business momentum, which continues to be pretty good, to any detail, Morgan, that we can get on the credit situation and kind of the plans as we go forward. But other than that, I think just kind of more of the same, get a sense as to what are the pre-provision earnings growth drivers of the company going forward and how are they performing. Fundamentally, they had, I think, 3% loan growth in the quarter, which is encouraging. Their credit metrics, excluding this loss, I think it was $4 million loss. And this is a company, as we said last week in our upgrade, they've only lost 12 basis points a year over the last 10 years. So Zions has an impeccable credit track record, and that definitely came through as we look at these numbers this afternoon.
David, I wonder what you think the legacy of this moment is going to be in the near term for how investors value regional banks. I mean, it reminds me of the DeepSeek moment for AI. What was that, last year, the year before? Hard to remember. This seems like one of those moments that perhaps is going to shift the types of questions that investors might ask and the way bank risks get weighed.
Actually, I would say no. I'm not a semi-analyst, so I'm probably not qualified to talk about DeepSeek. But I think how market participants think about banks can change on a day-to-day or a week-to-week basis. But from our perspective, it really doesn't change it at all. I think market participants oftentimes like to try and fight the last war. And the 2023 episode relative to what we saw last week really has no comparison or fundamental basis to be considered in the same light at all. So again, the stock prices are a function of how people feel. And again, that $50 million loss, it's important to have that context to understand that we lost $1 billion over a $50 million fraud loss. Zions earns $1.3 billion in pre-provision earnings. So that $50 million is just 2 weeks of PPNR for Zions. So again, it's more of just a continuing to take advantage of market psychology when sentiment gets too one-sided, and I think that was the case here. I think that's the lesson.